Over the past 5 months, the American labor market reports have constantly failed to align with the official forecasts. The NonFarm Payrolls for April proved to be no exception, sending shockwaves through the currency market so significant that a strictly vertical line could be distinctly seen on the dollar's chart. Notably, the preliminary estimates provided by various experts were ranging from 150,000 to 280,000 new jobs. On average, the market anticipated an increase of about 235,000 new positions. However, the actual outcomes revealed a more subdued reality. In April, the US economy showed signs of a weakening, with the non-farm payrolls coming in at just 175,000 new jobs, which was much closer to the lower end of the forecast spectrum. This figure appears even more modest when compared to the revised March figure of 315,000. The latest data underscore a significant slowdown in the pace of US economic growth. Additionally, an unexpected rise in unemployment rates adds to this gloomy scenario. The unemployment rate in April increased to 3.9%. surprisingly surpassing market expectations, which had anticipated it would hold steady at the previous month's level of 3.8%. It appears that the dovish forecast for the US interest rates have received substantial support from the labor market data, and Jerome Powell, head of the Fed Reserve, has essentially ruled out the possibility of rate hikes, suggesting that discussions might soon shift towards rate cuts. The weaker-than-expected labor market reports have strengthened the belief that the first rate reduction could occur as early as September. Consequently, risk sentiment is on the rise today, while the yield on the US dollar and Treasury bonds is under pressure. Trading on Wall Street ended on Thursday with gains amid strong corporate earnings reports from American companies, breaking a two-day losing streak. The S&P 500 index rose by nearly 1%. Furthermore, the chances of a continued ascent have strengthened. At the opening of the American session, the S&P 500 was firmly in a bullish territory, trading within the daily range of 5,112 to 5,130 points. Meanwhile, for the dollar bulls, the situation turned quite bleak, as the greenback plummeted at one point from 105.20 to nearly 104.50 points. However, the initial shock soon faded, and the leading forex market, forex currency, began to climb again, trading within the range of 104.50 to 105.40 points, as the US dollar faltered. The Japanese yen took a fascinating turn this week, showing a steady rise and gearing up for an increase of over 3%. This significant rebound, reviving what was once deemed a hopelessly weakening currency, is attributed to the Bank of Japan's active market interventions. While Japanese authorities typically refrain from commenting on such matters, data from the Bank of Japan indicate that Tokyo spent about $60 billion to support the yen. Perhaps they should have just waited until Friday, and today the Japanese yen has strengthened significantly, approaching nearly 152 against the US dollar. The euro-dollar pair took advantage of the dollar's weakness, not just stabilizing above the 1.07 mark, but also extending its correction into the range between 1.0727 and 1.0813. In this case, the euro's movement was primarily influenced by fundamental factors rather than technical analysis. Significantly, data from the United States labor market sparked a speculative surge in dollar selling across the forex market. From a technical standpoint, the stabilization of the pair above the 1.08 level could pave the way for the growth towards the next critical resistance at 1.09 USD per euro. Amid the falling dollar, Brent oil prices also saw some activity. Following the recent downward rally, Brent oil futures attempted to partly recover their value. However, the buying efforts proved insufficient for a full-scale retracement. As a result, prices stayed near the lower boundary of the daily range, around the mark of $83.4 per barrel. If a price is stabilized below the level of 83, it could strengthen the bear's position even though the asset appears oversold. However, if prices manage to hold above this critical level by the end of the week, the $83 mark could turn into the support line, potentially setting the stage for a rebound in Brent crude prices. This wraps up today's trading on the global markets on May 3rd. We hope that this trading week has been profitable for you and that your trading assets have ended it on a high note. The InstaForex TV team wishes you a great weekend. Stay tuned for our upcoming market reviews.